All right. Thank you for joining us today. We're here to discuss the Stony Creek Olive Ranch. This is an opportunity that was sourced and brought to us by Alta California Olive Partners, otherwise known as ACOP. And this is an opportunity to invest alongside an industry-leading oil olive operator in an off-market property that we believe was sourced at a very attractive entry price. And we're going to walk through a lot of these highlights here today. Before we get started, do need to run through some standard disclaimers. We have a few slides with the disclosures and other pertinent information that our legal team has written for your review. We'll show each of these, allowing enough time for review here. Again, just disclosures of risk factors. I want to clarify this is an investment. All investments do involve risk, some of which are outlined in this slide. The full confidential investment memorandum is available in the documents section, the offering page for the Stony Creek offering. So you can find the full risk disclosures listed there. And again, some more of the specific risks are outlined here on this slide as well. I'll give everyone a few minutes to review this. And just introducing myself, I'm Drew Lipke, the Director of Investments here at AcreTrader. I've been with AcreTrader for over 2 years now. Prior to that, my background is primarily in equity research, specifically focused on aerospace and defense and building materials and construction services, among some other industry coverage during my time. I've also personally owned farmland in Arkansas for almost a decade now, and I can certainly appreciate how difficult it is to own and manage a farm in an entire manner as opposed to a fractionalized manner like we provide here at AcreTrader. So just looking at the agenda today, we're going to touch on briefly the farmland market and then this specific property, the Stony Creek Olive Ranch, and the investment thesis around this offering. So this is a very simple point, but it's really important to stress because it's often lost on people. We lose over 3 acres of farmland every minute in this country. It is this fundamental supply constraint that, when coupled with the demand from a growing global population and a growing global middle class, that drives farmland appreciation in this country. And it's a critical piece to understand when you think about farmland overall. No amount of capital can add incremental supply to the amount of arable acres that we have. And then again, just when you think about why farmland, it can really be explained when you compare it to other traditional asset classes. Farmland investments historically have appreciated in value and have paid distributions consistently from either rental income or from commodity sales, depending on the structure of the investment. And to illustrate this a little bit more, this is the NC Reef data dating back to 1990, which is as far back as we have the data. And this shows just various asset class performance over that time frame. On the y-axis on the left, you'll see the average annual growth rate, and on the x-axis at the bottom, you'll see volatility. In other words, just swings in the investment over time. And it's important to note farmland investment returns are made up of 2 factors: the yield, which again comes from either the form of rent or from commodity sales, and then any land appreciation that you receive during the hold period. So you essentially generate potential distributions in those 2 ways. You can see historically that farmland investments have been very well positioned when compared to other asset classes, with very strong total returns and much lower volatility. So now touching on a specific opportunity. The long-term investment thesis for this development really boils down to 3 aspects. First is the fundamental dynamics for premium extra virgin olive oil in California. Second is the attractive entry price for this asset. And then third is the ability to partner with an expert team with this investment. So this property sits in Tehama County, California, in the northern Sacramento Valley. This is an area that is proven for olive production. This property was sourced off-market by our sponsor partner, Alta California Olive Partners. The property is virgin ground that will be developed into a super high-density olive ranch. Adam Engelhart, one of the principals for ACOP, has been a pioneer in developing super high-density the oil olive industry in California. This region is proven for olive ground. The sponsor team's well-established Black Butte Olive Ranch is located less than a mile to the northwest of the Stony Creek olive ranch. I would note the planned hold period for this offering is approximately 10 years. And you can see here the acquisition price of approximately $2,900 per acre, which we believe is a very attractive entry price for agricultural land in this region with sufficient water resources capable of growing high-value crops such as olives. So now just first touching on the underlying fundamentals of the California olive oil market. So this slide shows the global production regions of olive oil. A key point to note here is that the old world of Spain, Greece, Italy, and Portugal represent approximately 60% of global olive oil production. We're going to touch more on this in a minute, but this older non-irrigated production does tend to be higher cost and is facing difficult changes in climate that is driving olive oil prices to all-time highs. Also note here that the United States produces less than 1% of global olive oil production. It's important to keep in mind as you think about California. So here you can see trends in both the European Union and in their production of olive oil, and then the EU's exports of olive oil. And as a reminder, as we just showed, the EU is 2/3 of global production. Now, a few things are notable here. Production for the EU peaked in 2011 and has steadily fallen over the last decade. The second chart on the right here shows EU exports of olive oil. And really two things are notable with this. First is that exports have fallen over 30% since 2021 as a result of a changing climate. The second point is that between 2011 and 2021, exports increased by 45%. This shows the trend of European producers, really mainly Italy, sourcing oil from outside their own growing regions and then exporting this oil as if it was grown in the EU. Much of the oil that's being exported from these countries, such as Italy, is in fact grown in places like North Africa and then blended and shipped as if it was pure Italian oil. So global production of olive oil is projected by the USDA to be down 25% in 2023, according to the USDA. More importantly, you can see that global production has been trending down since the EU production peaked in 2011, as we saw in the previous slide. Now, the chart on the right here shows the global price of olive oil as reported by the International Monetary Fund. And as you can see, the global price for this commodity has been relatively flat historically until 2023, where the impact of multiple years of drought in Europe, and in particular Spain, have driven global prices to all-time highs for all grades of olive oil. And as you can see here, global prices are up 2.5 times from their long-term average. So this ranch, the Stony Creek Olive Ranch, is located in California, and it's meant to serve the United States domestic market. As a reminder, the United States consumes 13% of global supply, and yet it only produces less than 1% of global supply. So the United States has seen a steady increase in the consumption of olive oil for the last 4 decades, with consumption growing 5.6% on average annually over the last 59 years. So the historical demand trends in the United States are very encouraging, and yet we don't have the production to meet these demand trends sufficiently today. So here we just show how the United States, again, is the largest importer of olive oil in the world, yet per capita consumption still trails other developed markets. What this really indicates is that the demand trends that we saw on the previous slide still have plenty of room to grow. And in addition, there is room for domestic extra virgin olive oil producers to capture market share. So to that point on California, extra virgin olive oil that is 100% made from California sourced olives is really beginning to gain a premium in this growing domestic United States market. And this is because of the fact that California's state law that went into effect in January of 2022 requires brands to disclose the percentage of California-sourced olives that are used in extra virgin olive oil. There have long been concerns from consumers and consumer groups about the quality of imported olive oil, and this has really created an opportunity for California to differentiate itself as a premium product, and we are starting to see this take place in the market today. So on the left here, you see an old non-irrigated orchard in Spain. On the right is a picture of the Black Butte Olive Ranch, which is less than a mile from the Stony Creek Olive Ranch, and is owned and operated by the sponsor team here. The right represents the newest technology in farming oil olives and is indicative of the sponsor's farming style, which is a further improvement on super high density oil olive orchards with a hand pruning methodology that Adam incorporates. Traditional olive orchards in the Mediterranean region were grown oftentimes in non-irrigated orchards with trees that were planted sometimes at just 12 trees per acre. In the early 2000s, dense plantings of olive trees began in California in what is now known as super high density orchards with a trellis infrastructure. So under this method, 450 to 900 trees are planted per acre. The trees are then trellised to allow for mechanical harvesting, which dramatically decreases production costs. In addition, the trellis infrastructure high efficiency drip irrigation is installed to maximize the water usage. The benefits of super high density plantings are increased production, earlier bearing, more efficient harvesting, and therefore better returns. To put it in context, the Stony Creek Olive Ranch will be planted at 670 trees per acre. So next, just touching on the specific property itself here. So this property is located in Tehama County in California's Central Valley. Specifically, the property sits in the Sacramento Valley. So while the entire Central Valley has a Mediterranean climate with wet winters and hot, dry summers, the difference between the Sacramento Valley in the north and the San Joaquin Valley in the south is temperature and precipitation. For example, Tehama County, where this property is located, receives 20 to 30 inches of rain a year, while Kern County, further to the south in the San Joaquin Valley, receives just 5 to 10 inches of rain per year. You can see that variation in the precipitation map on the right here. And as many of you know, water is critical in California. These precipitation levels directly correlate with groundwater recharge. This is why groundwater in the Sacramento Valley is in a state of sustainability today when compared to the San Joaquin Valley. Now, looking at the chart on the left shows zoomed out topography. We don't always talk about topography as much, but it is very important for this ranch. You will notice the Stony Creek Olive Ranch sits in West Sacramento Valley in the foothills of the North Coast Mountain Range. The ranch is at an elevation of 424 to 507 feet above sea level. This is ideal for olive orchards as it helps to avoid the potential growing season freeze risk that is higher at the bottom of the valley to the east. So the elevation in the foothills here helps mitigate freeze risk that orchards at the valley floor face. And this risk actually became reality in 2022 with many olive orchards in the valley suffering from a late freeze while the foothills performed relatively well that year. So we mentioned the attractive entry price. Non-irrigated rangeland and pasture ground, so meaning not farmland, in Tehama County ranges in value from $500 to $3,250 per acre according to the California chapter of the American Society of Farm Managers and Rural Appraisers. The Stony Creek Olive Ranch comes with a newly installed and tested well that is more than capable of irrigating 100 acres of super high density olives. In addition, the property is well suited for olive oil development based on the soil testing that's been completed. This all indicates the property should trade well above dry pasture land values. Now, we can use our acres data on actual transactions to support our valuation assumptions. Now, what is different with this data is that it is based on actual transactions, which, while limited in volume, does provide a mark to market. So you can see the Stony Creek Olive Ranch here in the pink dot that you see on the screen, and then you can see surrounding transactions that have occurred over the last year and a half according to our proprietary database. This is not data that's readily available, and after it's been sourced by our team, it must be cleaned and verified. We have to then throw out transactions that are not applicable or not based on arm's length transactions or don't have sufficient water rights. Our goal here is to try and identify bare ground values, particularly as you move into the foothills. And what you can see is that bare ground values with irrigation based on transactions in 2022 and 2023 to date range from approximately $4,600 an acre to over $18,000 per acre. Again, the purchase price for the Stony Creek Olive Ranch is approximately $2,900 per acre. So during the course of our diligence several years ago with the Alta California Olive Partners Group, we heard it again and again that Adam Engelhart was one of the premier olive operators in the country. You'll see in this image an excellent representation of Adam's management style. These are super high density olive plantings that are hand pruned. This is one of ACOP's other ranches called the Black Butte Olive Ranch that is less than a mile to the northwest of the Stony Creek Olive Ranch. So this area is very well known to the sponsor team. So a bit more about the team here. Adam is a fifth-generation California farmer. He began in the olive industry back in the late 90s when he worked on his family's farm. Later in 2008 to 2014, he joined California Olive Ranch and took their acreage from 500 planted acres to 10,000 planted acres during his time there. He then joined Cobram Estates Boundary Bend subsidiary in 2014 and served as the president and CEO of their U.S. operations, greatly expanded their operations in the United States. And currently, Adam serves as president of Eagleheart Ag Services, which is owned by Alta California Olive Partners. He's vice chair emeritus of the Olive Oil Commission of California and chairman emeritus of the American Olive Oil Producers Association. Adam is joined by Tim Tomlinson as a member of Alta California Olive Partners. Tim has a long history in tech corporate law. He currently serves as director for a tech company, as well as director for Portola Minerals Company, which is the largest supplier of ag lime in Northern California. Tim has significant experience in corporate matters, including finance, mergers and acquisitions, and has represented clients in the technology industry for more than 30 years. Again, just looking back at Adam's experience within the California olive oil industry, he has over 15 years of combined experience. Worked with two of the three largest players in California's olive oil industry. You're likely familiar with many of the brands that you see in this slide. And again, Adam really took California Olive Ranch and then Boundary Bend's growth within the United States and really grew their planted acreage significantly during his time there. So looking at the offering terms and the structure for the Stony Creek Olive Ranch offering, here you can see the sources and uses of capital. Please note there is a full financial model in the document section and the financial section of the offering page. So we please encourage everyone to review that. The total equity capital raise is $1.4 million, with the sponsor team co-investing $60,000 upfront of Class A shares. The property is being purchased for $460,000. That does include a $30,000 easement in order to access the property. And that $460,000 represents the $2,900 per gross acre that we referenced. There's another $826,000 in cash on hand for development and for working capital, and then approximately $114,000 in startup costs and financing fees. There will be a development loan that has capacity up to $750,000 planned for this property. The projected max loan to value is 23% based on the projected appraised value of the property. Here's an overview of the offering terms. Again, all the offering docs and the full financial model is provided in the document section of the website. Notably for this offering, the sponsor team is investing $60,000 in cash. And then in addition to that, they're going to waive farm management and development fees during the first 4 years of the investment. This waiving of farm management fees totals $129,000 of notional value. The profits and loss allocation will be shared 85% to the Class A investors, 15% to the Class B investors. The Class B simply represents the sponsor here, Alta California Olive Partners and their affiliates. And then from a fee structure, again, you can see all the fees here. The sponsor is charging an $18,000 annual asset management fee, which is very in line with standard industry averages. And then the standard 0.75% acre trader management fee applies, as well as a standard 4% placement agent fee paid to Acre Trader Financial. Again, the organizational structure, hopefully this helps kind of put it in a little clearer context for everyone. This is typical for the sponsored offerings that you see on our platform. Acre Trader investors are investing in the Class A shares alongside the sponsor team. In addition, Eagleheart Ag Services, the farm manager, will waive a total of $129,000 in development and farm management fees in the first 4 years. Upon liquidation, the Class B units will receive $129,000 profit allocation. So the farm manager is in effect contributing $129,000 through fee waivers. Again, you can see the profits interest share. The Class B share represents a 15% profits interest. The Class A share represents 85% profits interest. This structure is meant to align incentives between the sponsors and investors, as the sponsor is very much incentivized through this carried interest to maximize the value of the orchard throughout the hold period. So, we understand many investors prefer to ask questions individually. We please ask that everybody reach out or email us to answer any questions that you have on the Stony Creek Olive Ranch. We're very excited to be able to bring this offering to market. Again, this is an off-market opportunity that was brought to us by these industry-leading experts. This property has sufficient well-drained soils, the appropriate rolling topography that's in the foothills of the North Coast mountain range that has proven to be highly suitable for super high density olive orchards. So we're very excited to be able to bring this to investors, especially at a time when the key growing regions of Spain and the European Union are struggling to supply olive oil to the world. And as a result of that, we're seeing olive oil prices at all-time highs today. So we also believe this is a very timely offering as well. So please reach out with any questions that you may have. We look forward to discussing this opportunity with you. Thank you.